Gwen Preston of Resource Maven. I'm here at the Metals Investor Forum in Toronto at the beginning of March, and I'm joined by Scott Close of EMX Royalty. If that name is unfamiliar, it's because the company changed names just 6 months ago, about.
Yes.
That name change makes a lot of sense to me, but because it captures a company that was predominantly a prospect generator, while that is still the fundamental driver of things, now what you really are is a royalty company that feeds your own pipeline. So why don't you capture for me a little bit just the business model and how that all played out?
Okay, so 14 years ago, we started out as Eurasian Minerals as a prospect generator, as you said. And so through the prospect generation business model, each time that we sold off a property, we always held back a royalty. Mm-hmm. So in those 14 years, we've largely organically been building a royalty portfolio.
Right.
And now that the portfolio has assumed a level of maturity, mm-hmm. a lot of those properties are in the development phase or the pre-production phase or even the production phase. And so now we elected to change our name to EMX Royalty to really more clearly reflect our current business activities.
Absolutely.
So we do augment our organically derived royalty portfolio mm-hmm. with royalty acquisitions when we can find those at favorable pricing valuations.
Absolutely. And so those two joint royalty models, mm-hmm. growing them yourself organically and occasionally acquiring them when the opportunity presents, have put EMX into a position where you're getting to a sort of magic point, if
mm-hmm.
I could use that, which is that this year you should actually be cash flow positive. Mm-hmm. A standout characteristic in the exploration business, which is a money-hungry industry, let's mm-hmm. not joke about it.
Yep.
But you guys, driven by this Leeville royalty that you have in Nevada, you guys are set to make money this year while still exploring a whole host of properties.
Right, and of course we don't have money just coming in from the Leeville royalty,
no.
Which are on a number of Newmont's assets on the Carlin Trend in Nevada. And primarily the cash flow coming off the Leeville are coming out of the Turf and the Leeville mines there,
right.
and those are both gold mines. But we also have the Balya royalty asset in Turkey that is cash flowing us right now, and that's our first organically derived cash flowing royalty.
Exciting.
And that's a lead zinc silver property in Western Anatolia in Turkey.
Okay.
That is in a modest scale of production right now, but we expect that to ramp up into the future. And generate more cash flow for us. We also have a royalty on Nevsun's Timok property,
right.
and it was originally Reservoir Minerals property in Serbia. We have a 0.5% royalty on that. And Nevsun is talking about commencing production in about 2021.
Right.
And we think that will pay us very handsomely in the future. And we also have another two properties actually in Turkey, Akarca and Sasorta that are in the development phase.
Right.
And then also we garner cash flows from other places besides right. just production royalties.
Yes,
so we also capture advance royalties. Mm-hmm. And people often ask me, what are advance royalties? Well, those are royalties that we are being paid on a property before it goes into production. Mm-hmm. So geobusiness statistics tell us that the average time horizon for from initial greenfields exploration on a gold property to first pour to gold mine is about 11 years.
Right.
For a large copper porphyry mine, the average time horizon there is about 28 to 30 years.
Yeah.
So, nobody wants to hang around for 30 years just to begin to start seeing a return on investment.
Yeah.
That's pretty crazy. So we insist on advance royalties. Mm-hmm. So once a company has taken that property and advanced it so far, then they have to begin paying us advance royalties. Mm-hmm. And then once that property commences production, then they can credit those back at about 50% of the production royalties per month until those advance royalties are sort of amortized out. But we do gain a fair amount of cash flow from that. Plus we have milestone payments, so if a partner takes a property to pre-feasibility or commences production or something like that, a milestone, then another payment would be due. We have annual fees coming in on properties, and for properties that we manage for our partners, we also capture a 10% management fee. So we have cash flows coming in from things other than just simply production royalties.
I think what speaks to me out of all of that is 14 years of making deals means that your team really knows how to make deals that make sense for EMX. That's why you have the stage payments and the milestone payments and the pre-production royalties. I mean, that's an experiential result, right? You know that this is what you need. The experience plays into the two other aspects of the business model here, which one is straight technical geology. You go out there and find these assets so you can sell them and collect royalties. And the other one is identifying strategic investment opportunities. And so not that often, but when the opportunity arises, EMX will buy a stake in a project or a company if you see something really interesting. One of those certainly is the flagship of that for EMX. So the Malmish copper gold porphyry in the far east of Russia is huge, and it could be an absolute game changer for EMX, just given its scale, depending on how things play out over there.
Yes, that's right. So actually, it's not just a copper gold porphyry, it's actually 14 of them.
Right.
It's on a property.
It's a district. It's a district of porphyries.
The property is about 16 kilometers long, about 5 kilometers wide, and there's been 14 copper porphyry gold centers identified on the property thus far.
Right.
And the initial resource that was published for the to meet some compliance requirements for the Russian government, we had to put together, or actually IG Copper and Freeport-McMoRan had to put together a resource on that. They came up with 1.66 billion tons with an average grade of 0.42% copper equivalent, which is the copper and the gold.
And the gold
Now,
together.
some people say that's a little low grade, but there's certainly a number of mines in the world who are mining copper at those grades.
Absolutely.
But the thing that really makes this project work is its immediate proximity to infrastructure.
Right.
Within a kilometer, there's a paved federal highway, a natural gas pipeline, and a high voltage power line corridor. And then on the other side is the Amur River, which is a huge river that flows out into the Sea of Okhotsk, where there's a port large enough to accommodate Panamax-sized ships, and then is in immediate proximity to Eastern Asia and those markets in Japan, China, South Korea, and so on.
Right. So when you're talking about low grade, first of all, there's potential for this thing to have much higher grade sections. That has to do with how the exploration has been done so far and that you haven't had a chance to focus in on those. But secondly, large and low grade works really well when infrastructure is present, and infrastructure is absolutely present.
Yes.
So then what's the concept with Malmish here?
The concept with Malmish is, first of all, let me talk about sort of our ownership in that, in sort of the project there. Freeport-McMoRan owns 49% of the project. Then IG Copper, which is a privately held company, owns 51%.
Right.
There's no underlying Russian ownership in the project. And we own about 40% of IG Copper's shares.
Right.
Right? So, and that's the way we like it. We don't necessarily want equity ownership in the project. Then we would be responsible for our portion of the exploration and development costs.
That's not your business model.
That's right. So we're simply shareholders in the controlling stakeholder there. And our designs are there. We want to monetize that asset. If you look at the opportunity curve in exploration and in production, we all know that the best part of the curve to be on is during the discovery phase, right? And that's where we are, and we want to take advantage of that.
Right.
So our plan is to monetize that asset and then EMX would be in a very nice place.
I mean, at the end of the day, what I can say that you can't is that EMX would likely get a payday that's equivalent to or higher than your market cap just from the sale of that asset.
Yes, that's right.
So no guarantees, but certainly is an effort that's underway.
Yeah.
Absolutely.
Yeah. And if and when that transaction takes place, I think we would see a very material change in the share price. That's my personal opinion.
Absolutely. Well, it's an exciting year. Cash flow positive, organic royalties coming into production, other royalties advancing. Malmish is an ongoing thing of interest. Lots to do.
Yep.
Absolutely. Well, thanks for joining me.
Thank you, Gwen.
Thanks for watching.